Thank you for attending this quantitative disclosure summary presentation. I am Kawai in JSCC's Clearing Planning Department and will be leading today's call. Today's meeting will be around 30 minutes, starting with briefing on major risk points, and we would address any of your questions as possible within the schedule. All meeting attendees will be on mute. But if you have any questions, please let us know using the WebEx Q&A function. To begin with, Mr. Miyauchi, JSCC's CRO, will give an overview of the quantitative disclosure from the second quarter of 2022.
Thank you. I would like to highlight some of the main points from the disclosures. JSCC keeps 64 billion yen of skin in the game, same as previous quarter, mostly from JSCC's own capital, but also includes contribution from affiliated exchanges. On aggregate, these were equal to 76% of JSCC's shareholders' equity. During this quarter, stress test breaches where the risk amount in extreme but plausible market conditions exceeded pre-funded resources were observed on 3 days for the cash security clearing services, as well as 1 day each for the precious metals and energy clearing services. During previous quarter, we observed breaches on 7 days for the energy clearing services. Most of the breaches of this quarter were observed in June when the cash security positions of some participants increased and the commodity market became volatile. All of the breaches were resolved on the next business day through the deposit of required additional collateral. The result of the margin backtesting for the past 12 months was within JSCC's targets, except for the ETP JGB futures and options, where the cover ratio fell below the 99% target confidence level. This was due to the JPY interest rate market turbulence in mid-June, with market expectations around BOJ's monetary policy, as well as a divergence in monetary policy between Japan and other areas, such as US and Europe. In response to these breaches and expecting further volatility in this market, JSCC revised the methodology on the price scan range for JGB futures on September 5th. Other than that, all other clearing services were comfortably within our targets, 99.5% for IRS and CDS, and 99% for other products. There were neither liquidity stress testing breaches nor any participant efforts during this quarter. Moreover, JSCC experienced no suspension of our clearing services due to system failure or any other reasons during the past 12-month period. Now I will pass back to Ms. Kawai.
Thank you. Page 7 is an introduction of JSCC's service structure. Our clearing services are divided into 13 categories according to the governing regulations and product features, and each maintaining its own default funds. Please note that in this presentation, some data is presented across multiple categories as the resources may be shared. From the product perspective, number 1, cash securities through number 3, index futures, may be called ETP non-commodity, and the subset under this may be called ETP non-commodity derivatives. For number 2, JGB or Japanese government bond futures, and number 3, index futures, and the products under number 4, precious metal futures, through number 10, sugar futures, may be called ETP commodity. From the exchange perspective, the product under number 2, JGB futures, through number 7, petroleum futures, may be called OSE-listed ETP. Because these are listed on the Osaka Exchange, From a regulatory perspective, the product under number 1, cash securities, through number 7, petroleum futures, may be called FIEA regulated ETP because these are governed under the FIEA. And the products under number 8, energy futures, through number 10, sugar futures, may be called CFA regulated ETP because they are governed by the CFA. Page 8 shows financial resources for a participant default, called skin in the game or SIG, and contributions from relevant exchanges and PTSs. Most of the exchange contribution is from entities in the same corporate group as JSCC, namely TSE, OSE, and TOCOM. As shown in the left-hand table, JSCC's skin in the game for ETP non-commodity was 20 billion yen, which is shared by all of the relevant clearing categories. And for stress testing, the sufficiency of the financial resources for each category was tested by prorating these shared resources according to the relevant default fund amount for each category. Page 9 shows the ratio of SIG to JSCC's capital. The left-hand graph shows the SIG to be used before the Mutualized Default Fund, or DF, and the right-hand graph shows the SIG to be used before the default fund plus alongside default fund of non-defaulting participants on a pro rata basis. SIG before default fund on the left ranges from 20 to 50% of shareholders' equity, and SIG before and alongside default fund is from 30 to 100% of shareholders' equity. So JSCC contributes relatively large amount of shareholder equity to SIG compared to other major CCPs, which shows our strong commitment to risk management. Page 10 shows the required default fund, which would be mutualized among non-defaulting participants. You will see that on this page, we have added a line graph for the ratio of SIG and contributions from exchanges to DF from members. For ETP commodity, in the upper center, the amount is about 12 billion yen, which is growing because of an increase in open interest, as well as the risk in the precious metals and energy segments. The total DF requirement for all ETP, namely the aggregate of ETP non-commodity, in the upper left and ETP commodity was about 313 billion yen. The IRS DF decreased by about 50 billion yen. This was mainly because the stress loss over initial margin or slowing decreased as a result of increased initial margin. While the stress scenario would not be revised to swiftly reflect the recent market move, the IM requirement should be increased due to the recent market volatility. Thus, the DF, which is equal to stress losses over IM requirement, decreased. The category with the largest DF requirement was OTC JGB in the lower right chart, with an amount of about 357 billion yen. In page 11, the data is listed for these graphs and amount of assessment or so-called cash call is also provided. As stated in the footnote, cash call for any ETD is capped at 3 times the default fund requirement. And for OTC products, it is capped at 1 time the default fund requirement. Page 12 shows the largest value and mean value of slowing, which is the stress risk amount exceeding IM deposited including add-ons. JSCC's default assumption is covered too, except for any listed commodity derivatives other than OSE Petroleum, which is the largest one plus the 5 firms with the smallest net assets. Among all clearing service categories, OTC-JGB has the largest slowing, with a peak value of 359 billion yen. As mentioned in slide 10, the DF for this category was almost the same as this peak slowing. Please note that due to the PFMI quantitative disclosures definitions, the default fund on page 10 is the value at the end of the quarter, but the slowing on page 12 is the largest for mean value during the past 12 months period. Also, I will note that the reason the slowing peak values for OTC-JGB remained unchanged was because the peak value for this quarter did not exceed the value from the previous quarter. Page 13 shows the number of days there was a shortfall in the stress testing of pre-funded resources and the largest shortfall. As mentioned in highlight, ETP energy significantly decreased from 7 days to 1 day. This was because sudden extreme market move and the position increase were less severe in this quarter compared to the previous quarter. Page 14 shows the required and excess IM amounts. The dark blue is the house IM requirements and dark orange shows clients. Light blue is the excess margin for house accounts and light orange shows client accounts. The required amount of OSE listed ETP, IRS, and OTC-JGB were the largest at between 1 to 1.5 trillion yen. Looking at the breakdown between house and clients, OSE listed ETP was driven mostly by clients. IRS was about half and half between house and clients, and OTC-JGB was mostly house. This trend has remained unchanged for quite a long time. Moreover, the client's excess margin held was quite large in OSE listed ETP and IRS, which has also not changed significantly. The data used for the graph on page 14 is shown on page 15 and 16. Now, page 17 shows the number of breaches in IM backtesting for the past 12 months period. This quarter recorded more breaches comparing to the previous terms. Due to the higher market volatility, page 18 shows that JSCC did not maintain the 99% cover ratio for ETP-JGB as required under the PFMI. In response to these breaches, JSCC reviewed the methodology on the price scan range for JGB futures and enhanced it on September 5, 2022. Taking account of this revision, the coverage for the 250-day backtesting would have been 99.18% as at the end of June 2022, which had been above the targeted confidence level of 99%. Please note that JSCC sets more conservative standards of 99.5% for CDS and IRS, which were also satisfied in the past 12 months. The chart shows the largest breaches in the past 12 months, which are about 10 billion yen for ETP-JGB, 7 billion yen for energy, 55 billion yen for IRS, and 36 billion yen for OTC-JGB. This test only looks at the base IM requirement without add-ons. JSCC has confirmed that these breaches could have been covered by resources such as IM add-ons, excess IM deposit, or SHIG, and the whole amount of the default fund would have been remained untouched. The upper chart on page 19 shows the quarterly largest value of variation margin, or VM, paid to JSCC, and the lower chart shows the largest value of IM called during each quarter. The maximum IM call for OTC-JGB during Q2 2022 was exceptionally larger, more than VM. This was due to the emergency intraday IM call on June 14th, which was triggered by the defined volatility threshold under the rulebook. This call reflects the elements of not only IM but also VM, which was triggered for the first time since the COVID-19 crisis in March 2020. Please note that while VM needs to be deposited and settled in cash, IM may be deposited in cash as well as various securities and other instruments, giving our participants some flexibilities for funding. Page 20 and 21 shows the composition of collateral used for IM deposit. On page 20, you can see that the majority of IM in cash, as shown in dark blue and dark orange, but some is in JGB and stocks shown in gray and yellow. Cash collateral is held at either the central bank or at selected commercial banks. The secured cash deposited at commercial banks in dark orange is held in settlement accounts of commercial banks, which are fully covered by the Japanese Deposit Insurance Scheme. On page 21, you can see that the majority is deposited in cash, but with some JGB. Deposit of stocks are not allowed for these OTC categories. The entire amount of cash collateral for OTC JGB is held in the central bank, and for CDS and IRS, the participants or customers may select their custodian for cash collateral, i.e. Japanese trust account or the central bank account in the name of JSCC. The secured cash deposited at commercial banks in dark orange for CDS and IRS is held in such trust account, which is legally protected from the bankruptcy of JSCC as well as the participant. Page 22 separates cash deposits into those for IM and DF. We are holding a total of about 6.3 trillion yen of cash collateral across all the categories. The amount is almost unchanged from previous quarter. Next, page 23 shows the custodians for this cash collateral, with almost 100% held in either the central bank account, settlement accounts covered by deposit insurance, or the trust account. Page 24 covers liquidity risk management. Please note JSCC risk appetite on liquidity is cover 2, but this data is presented based on cover 1 in accordance with the PQD guidance. And while JSCC separately calculates and manages default funds by category, for liquidity risk, JSCC calculates and manages it across categories. However, for OTC JGB, JSCC has established a separate liquidity framework using repo with clearing participants, because the transactions under this category involve large amounts of principal settlement. In the chart, you can see that the liquid financial resources significantly exceed the required amount, and no breaches were reported in the liquidity stress testing. At the time of participant default, At least the half portion of non-cash collateral may possibly be liquidated and applied to the settlement with survivors. However, in this data, non-cash collateral is not deducted either from JSCC's payment obligation of the estimated payment or the actual payment, because to be conservative, it could be considered difficult to switch liquidate such collateral on the date of default. So we do not regard such collateral as available liquidity resources. Page 25 shows the liquidity resources for the categories other than OTC JGB. The resources reported as cash at the central bank on the first line and secured cash at commercial banks on the third line include cash in the DF related to ETP, where at least 50% of the required DF minus 1 billion yen must be in cash. The unsecured cash on the fourth line shows JSCC's own funds available for use as liquid financial resources following a participant default. The unsecured committed line of credit on the sixth line shows the committed liquidity available from JSCC's parent company and multiple commercial banks that have been designated as fund settlement banks, and total more than 1.5 trillion yen. Now, we will move on to Q&A. If you have any additional questions, please let us know using Q&A function.
So now, the first question we have received is, in relation to the stress test breaches on cash equities, why JCC allowed massive accumulation of position of specific members? Should JCC have a mechanism to restrict such an aggressive risk-taking?
This is Nakajima from Risk Management Department. Thank you for your question. Okay, so JSCC has a variety of control mechanisms against excessive position taking, such as the additional IM for members with low financial condition or with stress loss over initial margin beyond a certain threshold. These breaches are reported to the management on a monthly basis, and if the lack of risk management is identified, JSCC will start the review on the current operations. On these specific cases, the breaches are temporary in nature, and thus issues in the current risk management was not identified.
Thank you. Now, the second question we received is, I heard about the start of holiday trading. Should the settlement be performed even on holidays?
Hello, this is Otashiro from Creative Planning Department. Yes, because Japanese settlement systems, such as those of the central bank, is not operating during the Japanese public holidays. But we are planning to introduce the comparable risk management, such as increase of a margin prior to holidays for those trading in the holidays. So due to the time limitations, please contact us directly, as we would like to reply to your queries, or we would be more than happy to discuss directly with anyone interested. Thank you.
Now, well, the third question we received is, can I check if there is a particular reason for a high C factor for OTC JGB segment? This is in a range of 4.9 to 5% in last 4 quarters.
Thank you very much for your questions. So we would like to check in the details for the reasons, but for this quarter, we have experienced quite a volatile rate. So we would like to reply by mail on these questions. Sorry for inconvenience.
Now, one more question we received is, why did the slowing for energy increase so much?
Okay, thank you for your question. As mentioned earlier, the main reason for this increase was a sudden expansion of exposure at some risk-taking firms, as well as sudden extreme market fluctuation in energy market.
Well, that was the last question we received. So with that, we would like to wrap up today's webinar. Please do not hesitate to contact us if you have any additional questions after the call. Thank you for your time again. We look forward to posting next webinar and speak to you soon. Thank you.